Markets extend gains after opening, seeing a flat open. All sectoral indices barring IT in the green. Broader markets outperform.
We're tracking 3 new listings today. Motisan Jewelers lists at a premium of almost 100%. Suraj Realty and Muthoot Microfinance lists at discounts of over 5% each to their issue prices.
Nifty IT in the red on the back of Infosys losing out on a $1.5 billion AI contract.
J. Kumar Infra's shares rally as CLSA hands out a positive report. The stock's target has been revised to 720 from 385. CLSA sees the firm getting large orders in the near future.
After opening with a stellar 3% surge, Adani Green pairs gains. Investors are gung-ho on the firm, which is expected to raise $2 billion by next year. Hot Money. I'm Hiral, Dadia, and with me is Agam, Vakil. Good morning, Agam. Clearly, if you see in terms of where markets go, we have absolutely picked up steam from that 10:30 onwards, and that upside does continue. If you see in terms of Nifty 50 as well, we're pretty much above the 41,450 mark. 42 advances on Nifty versus 7 declines. And you have DBS Laboratories, Hero Moto, Tata Consumer, Adani Enterprises, NTPC seeing some smart gains today. In fact, the auto pack is starting to pick up steam ahead of the auto sales numbers that will trickle in as well for the month of December in the next couple of trading sessions. So there is a build-up that's coming in on these names. Where are you seeing pressure? Infosys, 1.5% cuts on that one. Bajaj Twins are trading under pressure. So you have a Bajaj Finserv as well as a Bajaj Finance, which are down in trade. TCS, 0.3% lower, and a Tata Motors, which is down 0.3%. If you see in terms of Bank Nifty as well, it's absolutely interesting where we're seeing gains of nearly around 200 to 220 points coming in there. And with that, what's happening is the breadth absolutely is in favor of the bulls. You just have an ICICI Bank, which is on the borderline. But from a Kotak to an Axis to a Bank of Baroda, PNB, you call it the PSUs, all the private sector banks, all of them are trading in the positive. Let's quickly look at a few of the newsmakers in trade today. You have a Paytm that has been making the news on the back of hiring almost 1,000 employees, which is 10% of their workforce. The stock is seeing cuts of almost 1.5% in trade. Apart from that, if you see in terms of other names, Masdok is seeing some 9.5% up move. Balaji Amines and Alkyl Amines, both of these counters are up and about in trade. And you have VMart, which is trading under pressure. Maharashtra Seamless is also trading under pressure as we speak. But overall, let's stand across and look at a J. Kumar Infra. Some smart moves coming in on that counter. 19 to 20% is the kind of upside that we're seeing on today's session. And this is on the back of the CLSA upgrade. Now, overall, if you see in terms of J. Kumar Infra, it's clearly the urbanization which is at play, and that's what is CLSA's highlight in terms of today's session. Let's head across to the management. We have Mr. Nalin Gupta, who's the MD at J. Kumar Infraprojects, joining in to discuss more. Nalin, good afternoon and welcome to the show.
Good afternoon, Hiral.
Nalin, my first question coming to you is clearly in terms of FY24, the YTD order book stands at almost around 8,800 odd crores is what we are picking up, and the government bringing forward orders ahead of a likely election-led lull is something which has aided. How are you expected to look at FY24 as a year as a whole?
I would say this year has been a historical year for J. Kumar, wherein we have bagged already orders of around 8,000 crores, and we are further L1 in projects worth around 2,000 crores. So I would say that in terms of order book, this year has been really fantastic for J. Kumar. And also that it's been booked at the similar margins of 14 to 15% EBITDA margins. So I think this year has been really wonderful. And going forward also, Hiral, I would say that the amount of focus that's there by the government, central as well as state, on the infrastructure growth should be really phenomenon for all the infra companies coming forward, having execution capabilities.
Nalin, good afternoon. This is Agam here. My question to you is, so you already mentioned about 8,000 crores worth of the order book this year, and you are likely to see about 2,000, which is in the pipeline. What kind of execution can we expect for the balance of this remaining financial year? I believe there's just a quarter left. And that said, I believe that the fourth quarter of the financial year is usually the heaviest in terms of order flow. Any numbers with respect to expectations that you can give us?
Well, so I would say that in terms of the revenue for the Q4, I wouldn't say that it would add anything to it, because the orders that we have bagged is mainly in Q3. So the top line to show the results would take some time. But yes, FY25 should be somewhat better than what we have expected and the guidance given by us for FY25. But it would be too early for us to comment on the real impact, because it depends on how the project moves. So, but yes, going forward, the top line should be much better than what we are expecting. And for the new order books, I would say that we are still in the process of bidding for projects worth around 30 to 35,000 crores. So in this coming 6 to 9 months time. So I think even FY24-25 should be a good year with respect to order books and the top line.
So Nalin, I'm looking at an 11% year-on-year growth for the first half of this financial year. I reckon based on what you are saying is that, and please correct me if I'm wrong, can I assume that the entire financial year would likely see a growth in double digits, maybe early teens, but in FY25 you would have substantially better growth as compared to FY24?
Well, so we have been we expect that we should be growing at the rate of around 15%, because even like this year also we expect that we should be able to achieve a growth in the top line of around 15%. So I think it will be double digit for sure. Yeah.
Right, so 15% growth is what you're looking at in terms of FY25, 30 to 35,000 crore worth of projects that you will be bidding for over the next 6 to 9 months. Now, taking this into consideration, the building climate resistant urban infrastructure is something which the government is focusing on as well. And J. Kumar Infra is well placed in this. Taking this segment into consideration, what's the top line growth that you're expecting then? Because clearly you have brokerages which are saying that it's a 2 times the top line growth that could be expected because of this segment.
I guess, Hiral, I missed it out. You're talking about building sector, right?
Yes.
Yeah. So for building as well, J. Kumar, we have been doing a lot of works into the building sector for the past 5 years. We completed the ESIC hospital at Alwar, and we are doing the Lucknow building projects. Now we are L1 and 2 projects for building works at for the Harinagar, which is at Delhi for NBCC. And we are also we got the order for the Siddharth Hospital to be constructed at Goregaon. So building sector is again something which we are continuously focusing on. And yes, this area should also get us some order book as well as top line for years to come ahead. And
what would that look like, Nalin?
So building, Hiral, I wouldn't say that that's a very big area of focus for us, because we are known as a company for into the urban infrastructure and mainly into elevated and underground structures. So if you look at the order book of around 8 to 10,000 crore that we have bagged in this Q3, they're coming from areas like flyover bridges, elevated corridors, double-decker flyovers at Chennai with clover leaves. The recent order win also of the coastal road is an elevated structure altogether with cable stay and a elevated corridor connecting from Versova to Dahisar with a arm which will be connecting to GMLR. And also the order book that we have bagged this year of the tunnel of GMLR, which is again a project of one of its kind, wherein it's the largest diameter of tunnel to be constructed in the country of 14.5 meter dia. So it's all the projects, if you see, it's mainly that the company focuses is elevated metro, underground metros, your elevated corridors, expressways. So these are the areas where we are concentrating in a big way, and it also stands to be the specialized area of J. Kumar.
Okay, Nalin, a final question from my end at least. Your net debt to equity is negligible at the moment. Even your gross debt to equity stands at around 0.26. So I reckon that this is a fairly comfortable position that you are in at the moment. Considering the kind of projects that you will be taking up and the pipeline, can we expect that you would perhaps look to increase your debt proponent?
Well, I would say that there is no reason much to increase the debt. If you look at for the last 5 years, we have been able to maintain this. J. Kumar is one of the very financially disciplined company, I would say, and wherein we have been able to maintain our debt equity ratio from 0.2 to 0.25. And there would be slight upside in terms of the debt because of the new projects that we have bagged, and also because of the tunnel boring machine that we have to buy for the GMLR project. But we are quite comfortable in this debt equity ratio, and we don't see any major reason for this debt to go up.
Right. Nalin, a combined question I'm going to take quickly. One is, in terms of the order backlog, second quarter we've seen a growth of 44%. How does it look like in the second half of the financial year? And secondly, if you see in terms of the bill to book, that is currently at 3.7 times. Where do you see that settling?
Well, so I would say in terms of the top line, we are expecting a 15% growth, as we have said. And I would just say that right now I cannot comment on the numbers because it's the Q3 is still going on. And by the end of the Q3, within a month or so, we should be having the real numbers in hand. But yes, we are quite sure that we should be able to achieve the guidance given by us. And we'll achieve the H2 also as promised by us, nearly to the range of around 15% growth in the terms of revenue.
Right, so I think those are strong numbers we should be watching out for as well. Thank you, Nalin, so much for joining us on the show and sharing the details over there. So clearly, Agam, if you see the order book is something which is working in their favor. Their execution, if you see in the second quarter as well, has seen a growth of almost 9%. Yeah. So from an execution perspective, from conversion of orders perspective, everything seems to be on track, and that's something what the markets are reacting to.
And the fourth quarter will be crucial in terms of further order flows, which will give us a lot more visibility with respect to the company.
And next 6 to 9 months, you're talking about 30 to 35,000 crore worth of orders for J. Kumar is building. Right. And what's the key is, majority of their revenues come in from Maharashtra. I think 60 to 65% of their revenues come in from the Maharashtra region. So any expansion to other regions will be a benefit as well. So that's with regards to J. Kumar Infra. The stock is locked in upper circuit as we speak. But let's quickly slip into a short break. Lots more stocks lined up on the other side. We'll be joined by Rajat Sharma to give his views as well. Please stay tuned.
Welcome back, and with that we now shift focus to all the stocks that we want to address in today's day of trade on Hot Money. Well, we are going to talk about Paytm. Of course, a lot of news updates coming here, and this time in terms of the workforce being shed, and besides that we're keeping an eye on Infosys as well, losing out on a relatively large deal. Wipro, in terms of the leadership changes, a lot of speculation in the market, and the question really is about where the Wipro can head in the near term. Laurus Laboratories, of course, a lot of traction there as well with respect to positive news flow. And Vascon Engineering is the other stock that we will be addressing. But before we move on, let's get in our expert for today. We have Rajat Sharma. He's the CEO of Sana Securities. Rajat, good afternoon. Thanks for joining in. I'll start with Paytm, though. At the moment, of course, we understand that the company is looking at a lot of changes with respect to its organization and likely layoffs also on the cards. I'm going to say no more and get in my colleague Rishabh to give us more details on the same. Rishabh, over to you.
Thanks, Agam, for that. The stock is down about 2% today, and could also be a part of it. The stock has been on a downtrend for the past month or so. Ever since the RBI did what it did with unsecured loans, it increased the risk weights on that. So stock has been down about 30% over the last month. We're seeing a sort of a 2% downtrend today as well. The company, the management has constantly reiterated its focus on profitability. It is one of the few remaining new age stocks that is not yet profitable. We have Zomato that's posted a couple of quarters in the black, so has Nykaa, Cartrade. So Paytm, the clear focus is now to get to profitability, even if it takes layoffs to do so.
All right. Thanks, Rishabh, for getting us those updates. So at the moment, of course, the stock has recovered from day's lows. It's currently down just about 1.3%. But Rajat, let me come to you on this one. Thanks for joining in. Your view on Paytm, what would you do with this one?
Yeah, good afternoon. So, we've actually added Paytm after the fall that it witnessed last week. And I think this is one stock that I've been following very closely. I will give a disclosure, because when Paytm got listed at 2100, I'd said, this is the worst stock to buy at this price. But at 630, I don't think it's as bad as it was at 2100. The market cap, a lot of people say 40,000, 38,000 crore is too much. Keep in mind that, when it got listed from then till now, Paytm has established, because going back a few years, the biggest problem that Paytm had was people would always question, what is the revenue model? How do they earn their money? Now, this company is at a point where they have a very well-established revenue model. They charge about 7 to 9 bips from the merchants for all the payments that customers make. They are doing a lot of cross-selling, because now they've got these sound boxes and their scan codes literally reaching every small merchant to whom they can cross-sell loans. And, RBI changing the regulation with respect to unsecured loans, the impact in terms of the volume of loans that Paytm disperses would probably be huge, but not in terms of the value of loans. Because, small ticket loans, which is, 50,000 rupees or less. I mean, frankly, who is taking a loan of 50,000 rupees or less? And if you think about it, even the smallest merchants who are running stalls on the street side are probably looking at loans in excess of 3 to 5 lakhs. Why they've let go about 10% of their staff, I guess, is because those were the people who were servicing these small ticket loans. And, it may sound a little harsh, but look, that's how shareholder value is created, and that's how business is run. If they're not going to be disbursing a lot of these small ticket loans, they don't need to have a staff as big as that. They want to get into higher ticket loans, and they've got very, very well established revenue streams now, which will only grow going forward. So I'm actually quite positive on this stock. It could give you 200.
Right. So, Rajat, you're saying clearly at current levels, it is a good entry point for an investor with regards to Paytm. But moving on from a Paytm, if you have to look at the IT names, Infosys as well as Wipro. Now, Infosys clearly a loss of a $1.5 billion AI contract that has gone. That's what is putting the stock under pressure. And if you see in terms of Wipro, on Friday's session, the stock ended with gains of 6.5%, and this was on the back of Sanjay Jalona being hired, though the company has come out and given out a clarification saying that that is not on the cards. The stock still continues to see gains of 3%. What's your view on Wipro and Infosys?
Yeah, so, again, Infosys is a stock which I've had in my portfolio for many, many years, almost over a decade, and it's a stock which is likely to be in my portfolio for a very long time. And, coming to what you say, the loss of 1.5 billion, it's not really a loss. It's actually it's actually money which never came to them. It was a potential client with whom they could have done business of, that amount, and that business they're not going to do. A loss would be money which is on your books, which is gone. This is like a potential deal which was supposed to come their way, but look, for whatever reason, it didn't. Well, Infosys has been growing its revenue at a CAGR of 14% plus for the last 5 years, 10 years, or 20 years. You can take an average of any period. It keeps growing its top line at 14% plus. And so long as that keeps happening, every time Infosys comes out with a guidance which is a little negative and the stock falls, I think it's a good time to buy the stock. And that's what I do. I buy a few hundred stocks in every client portfolio and I keep accumulating it. I think I've said it a few times before. I think if one good multinational company has to come out of India, it has to be Infosys, although I think it's not really an Indian company anymore. They get the majority of the revenue from overseas. Most of their staff is overseas. So this is one stock I'm really positive on. It's available at a price earnings multiple of 23, 24, which is, unheard of for a technology company.
Right.
Wipro, again, I think, they've got 11 large deals that they won over the last 2 years. Yeah. And, again, available at a very, very good price earnings multiple. I think this is a stock where, since the price has not moved for a few years, it's fallen out of flavor for a lot of for the clients.
Yep.
I think it's a good time to buy this stock and slowly accumulate this.
Right.
They've got a very well established book of clients, and going forward, the stock should do very well.
Okay. All right. Thanks, Rajat. On that note, we'll leave it at that. Thank you so much for joining us and taking us through your views on a handful of stocks that we've spoken about. But on that note, we're going to slip into a short break. On the other side, a lot more lined up, specifically in this case, the management of Inox Wind. Stay tuned in.
Welcome back. You're watching Hot Money. Now, Inox Wind is a stock that is in focus. Hit a 52-week high after the firm bagged a 279 megawatt order. We spoke to the management and the company's order book and execution plans. Let's listen in to a slice of that conversation.
As of 30th September, our order book was 1,276 megawatts. I think with this 280 megawatts of orders, it goes up to about 1,500 odd megawatts. About, I would say 33% of that is with public sector enterprises. And I would say about 50% of the order book is broadly with C&I and IPPs. And maybe about 10 to 15% is with smaller retail captive consumers.
Got it. And this large number now keeps you in good stead for executing, say, circa 350 odd megawatts in the balance of, in the second half of FY24 and maybe 600 odd megawatts for FY25, because I'm presuming that was what the earlier guidance was, if my memory serves me right.
I think so. I think, God willing, we should be far stronger in FY25 and 26. We're not updating any of our guidances at this point in time, but once we get into, once we get done with Q3 and we're in Q4 of this financial year, we may look at upping guidance for FY25 and 26.